Imagine a world where money didn't exist. No coins, no paper bills, no credit cards. Just people trading goods for survival. A farmer exchanges grain for a fisherman's catch, and a potter trades bowls for a shepherd's wool. It seems simple, right? But beneath this seemingly innocent system lurks a force destined to shape the rise and fall of empires, fuel wars, and control the destiny of nations. This is the story of money, not just as a tool of exchange, but as a weapon of power, a mechanism of control, and perhaps humanity's greatest invention and curse. In the dawn of civilization, the world was a marketplace of barter. Mesopotamian traders exchanged grain for cattle. Egyptian farmers swapped linen for fish. Each trade relied on a delicate balance, a double coincidence of wants. But cracks began to show. What happens when the fisherman doesn't need grain, or when the potter's bowls are too many to carry? Societies needed a better system, something universal, portable, and divisible. The seeds of a new force were being sown, one that would reshape humanity forever. Enter the first true currency, coins of gold and silver, shimmering with the promise of value. Around 600 BCE, the Kingdom of Lydia minted the world's first coins, stamped with royal symbols that guaranteed their worth. Soon, gold and silver coins swept across Greece, Persia, and Rome, fueling trade and building empires. But with every coin minted, a new question emerged. Who controls this wealth? In Rome, emperors held the power, manipulating the content of coins to fund wars and expand their reach. With each victory, they grew richer. But with each debasement of the coin's value, trust eroded, and cracks began to form in the empire's foundation. Coins had solved the inefficiencies of barter, but they introduced a new danger: the control of money by the few, and the growing dependence of the many. By the Middle Ages, gold and silver still ruled, but a new class was rising: the moneylenders and bankers. In the bustling cities of Renaissance Italy, merchants deposited their gold in banks for safekeeping, receiving paper receipts in return. These slips of paper soon became more valuable than the gold itself, circulating as currency. But behind the walls of these banks, something extraordinary was happening. Bankers realized they could issue more receipts than the gold they held. People rarely withdrew all their deposits, so why not lend out the surplus at interest? It was a simple idea, but it gave birth to a revolutionary concept. Money could be created from nothing. Overnight, bankers became the gatekeepers of wealth, issuing loans, collecting interest, and quietly reshaping the economy. The 17th century saw the dawn of a new era. The Bank of England, founded in 1694, became the prototype for modern central banks. Its purpose? To manage the national debt and control the money supply. But there was a hidden power behind this institution. Governments, drowning in war expenses, needed loans. In return, banks demanded influence. Central banks gained the power to issue currency, set interest rates, and regulate economies. The creation of money was no longer in the hands of kings or emperors. It was controlled by private entities operating in the shadows. With this power came an unsettling truth. Money wasn't just a tool for trade anymore. It was a lever to control nations. Wars were financed. Economies were manipulated. And ordinary people became trapped in a cycle of debt, working not for themselves, but for an unseen master. The modern monetary system was built on a simple yet sinister premise. Money is debt. Every dollar in circulation is owed to a bank, created through loans that must be repaid with interest. But where does the interest come from? More loans, more debt. A system designed to grow perpetually, pulling nations and individuals deeper into a financial web. Throughout history, economic crises like the Great Depression revealed the fragility of this system. Banks collapsed, millions lost their savings, and governments stepped in, borrowing more to stabilize economies. Each crisis seemed like an accident, but in reality, it reinforced a cycle: debt, control, and the transfer of wealth from the many to the few. As the 20th century gave way to the 21st, a new chapter began. Money went digital. Credit cards, online banking, and mobile payments transformed how people exchanged value. No longer tied to coins or paper, money became an abstract number in a digital ledger. But even as technology advanced, the same players controlled the game: banks, governments, and financial institutions. The power structures remained intact. That is, until a mysterious figure emerged, offering a radical alternative. In 2009, a white paper circulated online, authored by the pseudonymous Satoshi Nakamoto. It introduced Bitcoin, a decentralized digital currency based on blockchain technology, a ledger distributed across thousands of computers, immune to central control. For the first time, people could transact without banks or intermediaries. Bitcoin promised financial freedom, transparency, and a break from the debt-based system. But with freedom came resistance. Governments and banks, recognizing the threat, sought to regulate or co-opt the technology. Today, the world stands at a crossroads. Traditional currencies, backed by central banks, coexist with decentralized cryptocurrencies. Central banks are developing central bank digital currencies, CBDCs, aiming to merge the control of fiat money with the efficiency of blockchain. The question remains: will money continue to be a tool of control, wielded by the few, or will it become a means of liberation, empowering individuals and breaking the chains of debt? The future of money is unwritten, but one thing is certain: those who control the money control the world. And as technology reshapes the financial landscape, the balance of power may shift once again. Money has always been more than just a medium of exchange. It is a symbol of power, a tool of control, and a force that has shaped the course of human history. From the barter systems of ancient civilizations to the digital currencies of today, the story of money is a story of struggle between freedom and control, wealth and poverty, the many and the few. As we move into the future, the question is not just what form money will take, but who will control it, and at what cost. The next chapter of this story is ours to write.